So we go to this section of the legislation and we've got who's in the net, what fishies are we going to collect in the net. So it's going to depend the type of entity that is the shareholder of the private company. So we've got the private company, we've got a shareholder, it's the shareholder and their associates. So what sort of shareholder have we got? We've got an individual, we've got a company, we've got a trustee, we've got a partnership. So for individual shareholders, we've got relatives, partners, partners in partnerships, we've got spouses, we've got the kids, we've got the trustees of a trust, we've got a company controlled by the individual, so we've got all the control tests and things like that. So we're basically saying pretty much anyone who's involved with the individual. For a company, it could be in a partnership with others. It could be a trustee, a corporate trustee of a trust. It could be an individual or associate controls the company, or another company controlled. So we've got interposed entities and all these sort of things as well. So again, don't just look at the exposure for this specific shareholder. We're looking at widen the net. And in general, for tax legislation, associates are included a lot of times. So this is the standard definition for associate and applies to a lot of other pieces of legislation. So if you can appreciate what an associate is, it's for not just Div 7A, but for others. So for trustee, so for the trustee shareholders, we're looking at anyone who benefits from the trust. And then we've got for partnerships as well. So we've got partners in a partnership. So that's covering a lot of entities. And remember, it's going to be a deemed dividend. If there's a Div 7A exposure, it's going to be a deemed dividend to them. They might not even know.